Okay, today I'm going to talk about an indicator of when a company's cost structure starts to spiral out of control, or when a company is giving you a major clue about when it's time to lighten up on the stock. And I call it the corporate jet indicator. And actually, it's not always just about corporate jets. It's kind of a genre of error, or a genre of cost structure that companies will take on. But the corporate jet is kind of like one of the most salient, or one of the most obvious examples of it. And there's a really good example for this indicator happening with PLBY Company, PLBY Corporation, ticker PLBY. And if you pull up a chart of this company, it went public a little over a year ago. During that year, they purchased a jet for the company and, of course, justified it in the filings. We learned, at least I learned about the filing, about the acquisition of the jet in early 2022 when they filed their 10K, which announced this. There was a blurb in the 10K about their acquiring of a jet. And it's sort of interesting. So when a company decides to do something like this, often first of all, a jet is expensive, and keeping a jet and maintaining it, it's a lot of fixed cost structure. And often it's bought usually so that management can fly around and fly their families around. And in this particular case, there was an arrangement that, the couple of senior managers could take their family around as well, but reimburse the company for the expenses. It was one of these things where you don't usually do this for shareholders. You kind of do it for yourself as senior management of a company, and it's an act of hubris. Another example of this kind of error would be when a company puts up a brand new gigantic headquarters. That's very, very reliably indicative of a peak in the company's fortunes. Doesn't mean the company's finished and going to go bankrupt, but you have to have a lot of years of very good results before you get the overconfidence that you're going to make a huge investment, maybe billions of dollars in a major, major headquarters. And so, for example, Bear Stearns built a gigantic headquarters in Manhattan almost right before the great financial crisis. And you just see examples of this over and over again. And with getting back to the corporate jet indicator, there's a kind of a funny joke from years ago from Warren Buffett, where he used to sort of reliably mock other companies for getting corporate jets. He considered it to be just not appropriate, not being a good fiduciary, not managing costs. And also he would talk about this hubris, this sort of overconfidence of management, and pride goeth before a fall, right? And then, of course, Berkshire Hathaway actually bought a jet. And so Buffett had he had to sort of justify it. And so he called the jet the Indefensible. That was his name for the jet, the corporate jet. So, he's okay. Maybe it was justified in his case. Who knows? But it was something that he was mocking companies for many, many years, and then got his own jet. And I can't tell you what happened with Berkshire Hathaway stock after that, whether the indicator played out in his case or not. But it's just an interesting example where he criticized other companies for something that he ended up doing for his company, and I'm sure he had justification, right? So, and also back to PLBY, in the 10K filing, of course, they had a paragraph explaining why it was worth doing and what the benefits were, and of course, they're going to articulate why it's a benefit. But at the end of the day, it's for us to look at when a company buys a jet. That's a bad sign, right? When a company builds a brand new headquarters, it's often a very bad sign. And then just to think about why it is a bad sign, it's usually because management, well, for a bunch of reasons. Often it's because management gets a little bit too big for its britches, or management gets very, very overconfident, or we're late into a cycle. Like when you're late into an industry cycle and profits are at all-time highs, or it's cyclical highs, business is very, very good. It looks like it's going to be sustainable. And that's when you make a decision based on the confidence of this recent history that you can make this huge investment or this huge increase in your cost structure. And of course, all up cycles have down cycles, and they often surprise not only all the investors, but also the companies themselves that are in these cycles. And so you want to look for ninth inning decisions, late stage, late cycle decisions, like a large brand new headquarters, brand new cost structure, or major acquisitions, things like this. So I lump this whole category of error or category of indicator into what I call the corporate jet indicator. And so you want to look for this kind of thing. It often indicates a coming turn in a cycle, or it indicates the late stages of very, very good times, and inevitably bad times follow good times. So just be ready, and remember this example of Playboy's corporate jet, Buffett's corporate jet, Bear Stearns headquarters. These are all just really good examples of this sort of warning sign for you to lighten up on a stock and maybe start to realize that a company management's getting a little too hubristic, a little too overconfident, and time to sell. Okay, so that's all for today. Thanks for watching.